Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. When considering the inclusion of blockchain-based and Web3 assets in portfolios, how do risk tolerance and portfolio construction play a role? Joining me to discuss, we have Elliott Campbell, principal at HarbourVest Direct Co-Investment Team to discuss. Elliott, it's great to have you with us. Welcome to Trade Talks.
Great. Thanks for having me, Jill.
You got it. Let's start with the basics here. What is Web 3.0 and how has it evolved since Web 1 and Web 2?
Yeah, sure. Kind of three simple words to help frame this. And those would be consume, share, and own. So Web 1.0 is often referred to as read-only, with users consuming analog content through a digital medium. If you look at Web 2.0, effectively what it did is it gave us the ability to not only consume content, but to create and share the content online. And then Web 3.0 is the third iteration of the internet, and it's leveraging public blockchains rather to allow for the digital ownership and transmission of value.
What sectors and industry does blockchain technology provide the greatest opportunities for?
Yeah, there's really three that come to mind today. The first is financial services. So public blockchains are really challenging incumbent and legacy ways of sending money. And so what these blockchains are looking to do is effectively remove the borders that exist in our current system, and present an opportunity to lower financial transaction costs and reduce counterparty risk. Another segment is just media. So public blockchains are really reimagining how brands and content creators interact with their fans and creating new revenue and distribution streams. And then finally, it's just energy and kind of infrastructure sustainability as it relates to Bitcoin mining, which has shown an ability to help balance electrical grids, given its ability to kind of quickly curtail its energy usage during periods of high demand.
Why should private market investors be paying attention to this disruptive technology?
Yeah, look, I think the way I tend to think about it is investing in public blockchains today is like investing in Manhattan in 1825, which is the year that railroads provided connectivity to Manhattan. And so if you think about Manhattan, it sits on a massive foundation of granite, which ultimately supports large skyscrapers that can house businesses and residents. And so as we all know, the land in Manhattan is some of the most valuable land in the world. And so today, what you have is you have a number of public blockchains basically competing to be the granite or the base layer protocol of Web 3.0. And so the bet here is that entrepreneurs, venture capital firms, they're going to want to build applications or buildings on top of the most solid protocol or land in Web 3.0. And so similar to what occurred post 1825 in Manhattan, I think we're in the very early days of the building of the public infrastructure or the protocols that will ultimately have applications built on top of them. And I think ultimately what we're going to see here is that the Web 3.0 networks have the potential to be some of the most valuable digital networks we've ever seen.
Yeah, I think the key here is going to be interoperability for sure, though. As you talk with potential investors, what do you think are the largest misconceptions about investing in the asset class, and how can the asset class overcome these misconceptions?
Yeah, there are really two things that come up the most often. The first is really that this asset class is all about tokens. And I think it's important to just understand that public blockchains, they just allow for digital property rights. And so just as analog property rights gives assets economic value, digital property rights are going to turn things that previously had no economic value into assets that can be bought and sold globally. The second thing you often hear is that the asset class is too volatile. And look, don't get me wrong, the asset class is volatile, but I think the monetization of all new technologies is volatile. So new technologies by definition are fundamentally seeking to disrupt the status quo and offer a better solution to an existing problem, or really solve a problem that we may not know that we have. And so ultimately digital assets are competing to educate new users and provide increasingly more value. And so I think you likely will continue to see some volatility, but I suspect that volatility will abate as adoption and education reach the masses. And I think the thing that will help the industry overcome these misconceptions is purely just time.
Mm-hmm. When considering the inclusion of blockchain-based assets and portfolios, how do risk tolerance and portfolio construction play a role?
Yeah, look, we think the real challenge for potential Web 3.0 investors is just deciphering where the opportunities and risks reside today, particularly in a tighter economic environment and a higher cost of capital. And so we ultimately think that the key here is to position yourself by having a portfolio that allows you to take advantage of these opportunities in a risk-adjusted way. And so we think the characteristics of Web 3.0 and a diversified venture capital portfolio can potentially help drive more robust and overall portfolio outcomes. And some of the analysis we've done shows that kind of U.S. venture funds that have historically invested in kind of Web 2.0 and Web 3.0 businesses have generated returns similar to or in excess of the U.S. venture asset class overall.
Despite pronounced volatility over the last 18 months, have you seen continued institutional adoption of blockchain technology?
Yeah, absolutely. I think over the last 18 months, we've seen some of the world's largest financial institutions either introduce or take action to kickstart their ability to introduce digital asset products to their clients. And so examples are ETF products, access to things like Bitcoin via your 401k, the rollout of institutional grade custody platforms, kind of large money remittance businesses introducing their own branded stablecoin products. And so I'm incredibly optimistic that the institutional adoption will continue. And I think it, in conjunction with kind of increased regulatory clarity, will continue to kind of fuel continued consumer adoption over the coming decades.
Mm-hmm. Well, what's the path forward for Web3 and blockchain in the next few years? I mean, I think it's important to note that blockchain is not synonymous with crypto and digital assets. It's more than just that. It's one application of it.
Yeah, I think you're absolutely right. And I think all paths point to continued adoption, continued innovation, and bouts of volatility. I think it's important to just note that the early upsurge of any new technology leads to a lot of uncertainty. And so I think we have periods of that with this technology. However, what you find over time with these technologies is as they mature and kind of the new set of products and industries emerge, you enter a bit of a golden era of the technology. And so I think we're currently in the very early stages of Web 3.0 being able to demonstrate that it's a superior technology to existing systems. And once it's clear that it facilitates kind of higher productivity and higher growth potential, I think the medium term outcome is basically inevitable. But we just have to kind of be patient and kind of get there and have builders and entrepreneurs build great products for consumers.
So in the last 30 seconds here, what's the key takeaway for investors?
Yeah, look, I think it's one, public blockchains are here to stay and represent a monetizable layer of the internet technology stack. Two, the ability to send digitally native value across the internet is going to reimagine and disrupt existing business models. And third, the adoption of new technology is volatile by definition. However, by building a diversified portfolio alongside some of the best emerging managers in the space with a long time horizon gives you the best opportunity to capture the value creation of this new technology.
All right, Elliott, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Jill.